Nominal bonds are probably the single worst asset you could hold. At the very least, I would switch them to inflation linked bonds because now at least whatever CPI prints, you're going to get paid that. You could say, I don't believe what Karen is saying. I think inflation is definitely coming down, not going to be entrenched. If that happens, you're no worse off. That's what's currently priced in nominal bonds. But if you're wrong and inflation actually ends up being higher than that, at least you'll get paid whatever it is CPI prints. So that's a little bit of a win-win situation. To me, inflation-linked bonds are probably the best stagflation assets that one could own and are pretty under-owned relative to how valuable they could be. And then you go to commodities. And I think commodities are really interesting because in a world of no inflation, I think commodities for a lot of investors seem like bad equities. They were pretty correlated, but there wasn't a lot of reason to think they had the same degree of risk premium. So you got a lot more excited betting on tech than holding raw commodities. Why are you holding this? But if you look at periods where inflation is high, they don't look correlated anymore. And of course, they haven't been very correlated in recent months because you're getting higher inflation. If you are worried at all about exposure to rising inflation, which with a 60-40, you really don't have a lot of protection, it's hard to get away from just literally hold the raw materials that are part of making an economy work. Just hold those raw materials in that raw form. And the more squeezes there are, the more we need to keep coming up with more raw materials, the more those prices will go up. And when I look at what's happening in the world, there's such a massive need to rebuild infrastructure, do physical capital expenditures, change the physical outlays in many ways, in ways that won't even necessarily increase productivity either because of security issues and concerns about politics, and sometimes because actually we've underinvested in the physical economy. But this huge demand to go rebuild physical things is happening at a time where it's not like so much of this raw materials are lying around. We've spent many years not investing in getting them out of the ground. So probably commodities and inflation-linked bonds feel to me like the things most missing from strategic asset allocation in this environment.